Good morning, everyone. Welcome to the market opening bell on Thursday, 12 December, your 10-minute guide to the stock market. As the market awaited the Federal Reserve's interest rate decision outcome, Hong Kong stocks staged a rebound. The Hang Seng Index opened 1 point higher, dipped as much as 176 points in the morning session to a low of 25,257, then turned higher in the afternoon and closed at the day's high of 25,540, up 106 points or 0.4%. The H-share index rose 18 points or 0.2% to 8,954, while the Hang Seng Tech Index gained 26 points or 0.5% to 5,581. Total market turnover reached 193.3 billion Hong Kong dollars. Southbound Stock Connect recorded a net outflow of 1.018 billion Hong Kong dollars from Hong Kong stocks. Among the notable flows, net buying was seen in Xiaomi, totaling 6.19 billion, Agricultural Bank of China 3.94 billion, Alibaba 3.42 billion, Meituan 3.2 billion, Sinuk 2.69 billion, Hua Hong Semiconductor 2.5 billion, and PopMart 1.79 billion. Net selling focused on tracker fund totaling 15.59 billion, Tencent 6.05 billion, China Construction Bank 1.23 billion, and SMIC 1.18 billion. According to statistics, Southbound funds have now bought Xiaomi on a net basis for 9 consecutive days, totaling $7.398 billion, and have bought Agricultural Bank of China for 3 straight days, totaling $993 million. Technically, the Hang Seng Index rebounded after approaching the important support near 25,150, having lost a 100-day moving average at 25,850. That level has turned from support into resistance. In the near term, the index is expected to trade between 25,150 and 25,850. Mainland Asia's weakened, with the major indexes diverging in the afternoon. The Shanghai Composite retreated below 3,900, while property shares lifted the Shenzhen component from negative to positive territory. The Shanghai Composite closed down 9 points or 0.2% at 3,900. The Shenzhen component rose 39 points or 0.3% to 13,316, and the Chinex index fell less than 1 point or 0.02% to 3,209. Total A-share turnover in Shanghai and Shenzhen combined was 1.7804 trillion yuan. The central parity rate of the renminbi was raised 20 pips to 7.0753 against the US dollar. China's November CPI rose 0.7% year-on-year, the highest since March 2024 and in line with expectations. Core CPI rose 1.2% year-on-year, affected by improved domestic supply demand in some industries and the pass-through of international commodity prices. The PPI rose 0.1% month-on-month, but fell 2.2% year-on-year, worse than the expected 2% decline. Producer prices have now remained in deflation for 38 consecutive months and are believed to be a policy priority for 2026. When meeting in Beijing with the heads of the World Bank, IMF, and UNCTAD attending the 1+10 dialogue, Premier Li Qiang stated that during the 15th five-year plan period, the mainland economy will continue to improve. China will implement more proactive macro policies, address market concerns, better utilize fiscal and monetary policy tools, and keep economic growth within a reasonable range. The US has approved Nvidia's export of H200 chips to China. It's reported that ByteDance and Alibaba are both interested in purchasing them, as the H200 far outperforms any other chip legally sold in China. However, China is still expected to restrict the import volume of H200 chips in order to achieve self-sufficiency in semiconductor production. Buyers may need to go through an approval process, submit applications, and explain why domestic suppliers cannot meet their needs. Insiders say authorities have not yet made the final decision. SMIC fell 0.2%, while Hua Hong rose 1.2%. Sunny Optical announced that November handset lens shipments reached 119 million units, down 2.3% month-on-month, but up 7.8% year-on-year. Handset camera module shipments were 41.49 million units, down 7.8% month-on-month and up 10.9% year-on-year. Vehicle lens shipments were 12.634 million units, up 3.4% month-on-month and a sharp 69.4% year-on-year. Q Technology reported total camera module sales of 41.755 million units in November, down 11.9% month-on-month and up 0.4% year-on-year, of which handset camera modules fell 13.6% month-on-month and 5.6% year-on-year to 38.053 million units. Fingerprint recognition module sales were 17.795 million units, down 3.4% month-on-month and 8.8% year-on-year. Month-on-month, both companies were affected by seasonal factors, with handset shipments dropping noticeably. November is a traditional low season, and global smartphone shipments are expected to fall 5 to 8%. Month-on-month, Sunny Optical's decline was milder. Lenses down 2.3%, modules down 7.8%, and Q-Tech's down 13.6%, indicating greater order stability at Sunny, likely thanks to long-term contracts with high-end clients such as Apple and Huawei. Year-on-year, Sunny Optical shows strong recovery. Handset lenses up 7.5%, modules up 10.9%, reflecting market warming after a low base in 2024 and demand for AI cameras. Vehicle lenses surged 69.4% year-on-year, highlighting the success of its diversification strategy. Q-Tech faced greater challenges, with handset modules turning negative due to order volatility and intensifying competition among mid to low-end clients such as Oppo and Vivo. However, overall camera module sales edged up 0.4% year-on-year, and non-handset business doubled, signaling early signs of transformation. New listing JD Industrial, stock code 7618, closed at 13.73 Hong Kong dollars in the grey market on Philip March yesterday, $0.37 or 2.6% below the IPO price of $14.1. Excluding handling fees, each bought lot of 200 shares recorded a paper loss of 74 Hong Kong dollars. KPMG expects Hong Kong to have around 100 IPOs this year, raising 272.1 billion Hong Kong dollars, reclaiming the global number one position. Looking to 2026, the firm forecasts 180 to 200 IPOs, raising 350 billion Hong Kong dollars. KPMG believes there will be several $5 to $10 billion deals next year, though probably none as large as this year's CATL, over $40 billion. Currently, more than 300 IPO applications are being processed at the Hong Kong EX, and including confidential filings, the total could reach around 400. KPMG expects Hong Kong to remain in the global top 3 next year, with the main challenge coming from the NYSE and Nasdaq, where listings by large tech firms could significantly boost their fundraising totals. Market chatter suggests SpaceX, OpenAI, and Anthropic are among major tech companies considering US IPOs in 2026. The Federal Reserve on Wednesday cut rates by another 25 basis points to 3.5 to 3.75%, the third consecutive cut, and announced it will resume purchasing Treasury securities, continuing the pause in October decision to pause balance sheet reduction. President Trump, who has repeatedly criticized the Fed chair for cutting too slowly, said the reduction could at least have been doubled. Markets are now pricing in more easing next year, and the 3 major U.S. indexes all rose on Wednesday, The Dow closed up 497 points or 1.1% at 48,057. The S&P 500 rose 0.7% to 6,886, nearing its late October record close, and the Nasdaq gained 0.3% to 23,654. Small caps benefited more from the rate cut, with the Russell 2000 hitting a new high, up 1.3%. The Nasdaq Golden Dragon China Index, which tracks US-listed Chinese stocks, rose 49 points or 0.6% to 7,780. Among the Magnificent Seven, gains and losses were mixed, with Tesla and Amazon each up more than 1%, while Microsoft fell 2.7% and Meta dropped 1%. Oracle released results after the close on Wednesday for the fiscal second quarter ended 30 November. Net profit surged 95% year-on-year to $6.14 billion US dollars, and adjusted earnings per share of $2.26 US dollar far exceeded the expected $1.64 US dollars. Revenue, however, rose 14% to $16.06 billion US dollars, missing the consensus of $16.21 billion. The shares fell 7% in after-hours trading. Cloud revenue grew 34% to $7.98 billion US dollars, far above the expected $7.92 billion. Cloud infrastructure revenue jumped 68% to $4.1 billion, and cloud applications rose 11% to $3.9 billion. U.S. labor cost data show compensation costs for American workers rose 0.8% in Q3, slower than the 0.9% increase in Q2 and slightly below the expected 0.9%. Wages and salaries grew 0.8% versus 1% prior quarter, while benefit rose 0.08% versus 0.7% previously. At the post-meeting press conference, Fed Chair Powell said the short-term outlook is challenging, with inflation risk tilted to the upside while the labor market has softened and downside risks to employment have risen in recent months. The balance of risk has shifted. However, Powell stressed that monetary policy is not on a preset course, and the committee will make decisions meeting by meeting. The dot plot continues to show only one rate cut next year and another in 2027, with the long-term federal funds rate around 3%, unchanged from September. At the same time, the committee raised its 2025 US GDP forecast by 0.5 percentage points to 2.3% and lowered its inflation forecast from 2.6% to 2.4% versus the latest September reading of 2.8%. Our stock pick today is FIT Hon Teng, stock code 6088. FIT Hon Teng focuses on the R&D, manufacturing and sales of precision connectors, interconnect solutions and related electronic products. Its business covers high-growth sectors including consumer electronics, AI servers, electric vehicles, and 5G AIoT. The company holds a leading global market share and ranks number one in the connector market in Greater China. The group's AI server interconnect products such as copper-based interconnects and backplane connectors feature proprietary patents and strong manufacturing barriers. These products have already been certified by Nvidia and are expected to enter the supply chain for Nvidia's GB200 NVL server racks. As the parent company, Hon Hai Foxconn is collaborating with Nvidia to build advanced computing centers, and Hon Hai commands a 40% global market share in AI servers. As a key supplier within the Hon Hai ecosystem, FIT Hon Teng will directly benefit from this growth. With the widespread adoption of artificial intelligence, the global connector industry is undergoing rapid technological evolution with significantly higher requirements for bandwidth, power delivery, and compatibility. This trend enables connector and cable products to be deployed in a broader range of applications. The group is focused on developing and producing high-speed connectors and cable modules to meet surging demand, which is expected to drive substantial revenue growth and further solidify its market leadership. At the same time, the group continues to invest heavily in technological innovation and product development to ensure it can deliver the most advanced solutions and support future network infrastructure needs. In the automotive sector, the group completed the acquisition of Germany-based Optical Group at the end of 2024 to strengthen its capabilities in vehicle electrification. By leveraging Optical's leading position and innovation in high-voltage EV systems, combined with the group's own expertise in automotive wiring harness technology, the two businesses are highly complementary in products and technology. Integrating the resources of a newly joined German automotive team is expected to deepen relationships with automotive brand customers, expand distribution channels, advance technology development, and optimize manufacturing. The group believes that with its leading position in interconnect solution development and production is well positioned to capitalize on the transition from traditional internal combustion engine vehicles to new energy vehicles. In addition, the strategic partnership with the broader Hon Teng Group will help capture new opportunities in the future electric vehicle market. The group also plans to increase investment in key components for in-vehicle electronic systems and autonomous driving. Investment suggestion: recommended entry price $5.6, initial target $6.2, then $6.60, stop loss $5.30. I do not hold any shares of the above mentioned stock.